Well, good morning, everyone. Welcome to our Thursday morning trading session. Hold on here just 1 second while I get you my screen. All right, so we just had the NASDAQ market open up here, and they're falling off a little bit. It looks like relative to other days, we're actually opening pretty much where we left off. There's no real opening gap to speak of this morning. You can see the overnight very, very quiet. Asian session put in a little bit of a rally, but not that much. So we finished the day right around here, around 43.25. And that's where we're starting the day, around 43.25. So that's something a little different. There we go. Yeah, I don't know. The trend forecaster says we're going to be in trend mode for about an hour's time here. At the moment, I'm just looking to see whether we're going to get any momentum out of this open. Gold prices putting in a little bit of a rally, so that could weigh on the stock index. But right now, it's just blah. Crude oil prices slipping a little lower. Which would kind of confirm what we're seeing here. All right, we're getting a first micro-macro cross signal here on the hawk. This is a little tough. I'm going to run it, the stop way back up here. Now, you might be looking at this and saying, Eric, how do you consider that a first micro-macro cross? The micro line and macro lines never crossed over. That's true. But what has happened is that everything has gone out of sync and come back into sync. So we have trend lines that have gone out of sync, bar colors that are out of sync, filter that went out of sync. And now this is the first signal where everything is back in sync. So technically that makes that a first micro-macro cross signal. Let's shoot a little trend line across the highs here. All right, we're drifting a little bit here. It's probably going to get back up here somewhere, maybe produce a macro pullback, so I'm going to cancel this signal here at the moment. Yeah, there it is, back into the macro pullback. And now we're into yellow bars. Coming into the hard edge. Okay, here we go. We're going to get a green bar sell here. Maybe. There it is. Now, terrific. I'm going to look to buy this green bar sell. Now, the green bar sell, remember, you can trade it either way, or you can trade it not at all. You can just use it as an early warning. Now, we should anticipate a retest of the lows here before the market tries to head higher. So it's okay if you chose to short this green bar sell. We should see a test of the extreme before the market packs up and heads the other way. Here comes yet another green bar sell. So we've got the warning dot. We don't have the signal yet. I know this doesn't look like it's going to be enough to really retest the lows. All right, so here we go. Here's our retest now of the lows. Our test of the extreme. Let's see what we're doing here on the other tools. Yeah, we're working a trend change signal here on the Falcon, still into the hard edge here on the Eagle, and possibly going to produce a soft edge buy on the Raptor. So we've got a couple of things that may be queuing up here. It's like the market is in slow motion this morning. Okay, so I'm going to get rid of my break even. I'm just going to pop in here a buy order on this signal here. I should have parked an order on the Falcon also. I should have known everything would print at the same time. Let's try for a second push on that one. So here you can see the situation with the green bar sell. How I said that very often it will develop into a first micro macro cross. You can use it as an early warning. Well, that's exactly what we're seeing here, is that it looks as though the first micro macro cross is going to print exactly the same price as, or more or less the same price as the failure of the green bar sell. All right, one more test of the lows, one more test of the extreme here, and possibly even going to get a red bar buy signal. Oh, I guess I'd better get a stop and play. All right, that one's not active yet. I better get a stop on my Raptor. Nope, that's not going to do. We'll just throw one in manually. Okay, and while that is sorting itself out, Boz is asking, Eric, what are your thoughts on crude oil? Well, let's bring crude oil over here. Here's crude oil now on the hawk. And crude oil and the stock indices have been following each other pretty closely today. Normally or for the last little while, normally there's a loose relationship between the two markets, especially with something like the Dow, which tends to be more industrial than, say, the NASDAQ. But even so, there tends to be some sort of relationship there. Crude oil opened right here at 6 a.m. Pacific, 9 a.m. in the East. We did get a first micro macro cross just prior to the open. So right now, crude oil definitely looking a little bit more bearish today. Rather choppy yesterday. It's kind of the way the stock market went also. So no signal currently printing on the hawk. I would like to see the hawk rally a little bit. That might help bring up the NASDAQ market there. Here's crude oil now on the Falcon. And here on the Falcon, you can see that we are bouncing off of our secondary support line. Now that's significant because we're below the primary support. Usually when we get below the median and the primary support, the market will stay a little bit bearish. And it looks like that might be the tone today. Yeah, Bass says it looks bearish today. And yeah, I would agree with that. It does look a little bit bearish. Here out of the open, when we had that signal print on the hawk, we also had a trend change signal printing here on the Falcon for crude oil. Now let us bring over the Eagle. And we had a rather drawn out rule of 3 signal here on the Eagle. The rule of 3 is our reversal signal on the Eagle, but it must always be preceded by a test of the extreme. So you can see it was kind of drawn out. Technically, we did get 3 counter trend signals. There's 1, there's 2, and there's 3. So when we get these counter trend signals that are preceded by a retest of the highs, then that's a pretty good clue that the market may try to head lower, at the very least to retest the lows, and it looks like that's what we're looking at right now. So I think you're right. I think crude oil may have a little bit of a bearish flavor today. So our buy trade on the hawk didn't work out. It got a little bit cute with the buy. Here's a first micro macro cross now on the short side. So if they don't want to go up, let's see if they want to go down. What I'll do on days like today is I'll pay particular attention to signals like the first micro macro cross, which I know are high probability signals. And if those signals fail, or at least fail to hit my profit objective, my high probability profit objective, then I know there's something not quite right with the market. Tony says, Eric, I have the Geiger counter in my indicator list. It was displaying yesterday, but not today. Any ideas? Are you sure you just didn't lose it? Are you sure you just didn't tuck it away on part of your chart and you can't find it? If so, you can go here to your indicator window. You can delete your Geiger counter and then you can reapply it. Where'd it go? Come on, Geiger counter. Shoot, I got too many indicators on here. There it is. voila, it shows up again. So you can try that. When you apply the new Geiger counter, you're going to see that it's on the back of everything. So, oh, see, Ben didn't tell me that. That's a simpler way. So what you want to do is you want to click on the Geiger counter so it's highlighted. Then you want to hold down your Shift key and roll the button on your mouse. And you want to bring it to the very front, so level 1 of 10. And that will make your Geiger counter sit on top of everything. Tony says I did the delete reinstall, but no luck. Okay. I'm kind of drawing a blank why it might not be showing up now. Yeah, check with Ben. Tony says I'll check with Ben. That's the best thing. He'll know. Alex is asking, Eric, I have the support and resistance suite on the NASDAQ, but I have different lines than you. Could the time of the computer, could be the time of the computer and calculated differently? And could that influence trading? Oh, Alex is in Europe. Yes. What you're going to want to do if you're following the North American markets, Alex, is you're going to go here to your support and resistance lines and your time offset. You're going to want to change it to New York time, to Eastern time. And that should straighten out the numbers. All right, so they're struggling to head lower. They're struggling to move higher. Oh, and Alex, one last thing. If you're having difficulty with syncing them up like that, you can email me, but the best thing to do is to email Ben. And Ben's email is support@indicatorwarehouse.com, and I'll send everybody his email address. But that should be the fix. I know Paco is in Spain, and he has some problems with the support and resistance lines, and that was exactly the solution for him as well. Presmic asks, how do you undo the hide trade manager button? Well, if by undo do you mean if you want to delete it entirely from your margin there, you need to disable your trade manager. So just go here to your strategies window, click on trade manager, click remove, and voila, no more hide trade manager window, but also no more trade manager. The hide trade manager window, they put this in here for people trading off of laptops where, you know, screen real estate is pretty precious. So they gave you the ability to make your charts a little bit bigger. And then when you see something promising happening, like, oh, we're getting a late filter entry signal here. Maybe I want to take advantage of that. So then you could set up to take your late filter entry. So the late filter entry on the Falcon has the trend change component. We need that before. Our filter goes out of sync, and now we're going to anticipate it coming back into sync. Okay, and it looks like it's not going to do that, so I can get to Randy's question here. Randy's asking about the support and resistance time. If I'm 2 hours behind, do I put in 2 or -2? All right, guys, you're going to have to bear with me here because, oh yeah, Ben never specified. He should have actually set it up for Greenwich Mean Time. That would have been the easiest thing to do. I'm sorry, Randy, you're going to have to experiment a little bit with that. And I'm going to shoot Ben an email about this also. To get the right offset. I would say though, while we're in the room, just try to put in +2 and see whether your lines get more or less like mine. Andrew's in Europe also. He says, I wasn't aware we had to cater to time zones. Well, if you're trading a market that's native to your time zone, like the DAX or the CAC 40 or something like that, you shouldn't have to adjust your support and resistance lines. I wasn't even aware of this issue until Paco got the support and resistance suite, and he said, hey, my lines aren't syncing up with your lines. What's up with that? And so we looked into it, and it turns out that the programming, the lines print at midnight New York time. Now, I should also show you my data series. I happen to have, I have 10 days, so I don't have, I think that's the default. Now you can see I haven't played with my lines at all, and I'm on the Pacific Coast, and I have a 0 offset. So my lines print right here at 9 p.m., which would be midnight in the East. Here, there's not much going on in the market right now, so let's play with this. Let me move them forward 3 hours. Let's see what that does. Okay, they still print, it looks like, oh, wait a sec. Okay, so there they are at midnight. Right. All right, 1 second here. My experiment is not very good. I need to make a note of a couple of the times. Okay, so we've got 43.12. and we have 43.26 quarter for primary, and we have 43.40.50 for a median. All right. See, you guys are going to confuse me now. So I'm on the West Coast. For me to sync up with the East, I need to move my lines 3 hours ahead. So here's midnight. Wait a second now. Yeah, midnight. No, midnight my time is 3 a.m. Eastern. Oh, did Ben actually set it for Pacific? Because you're right, the numbers do change. We had a support line at 43.12. Now the support line is 43.06. We had a primary line at 43.26. And then we had a median line at 43.40. So it looks like it's off about 6 ticks. Yeah, Randy says he's 2 hours ahead of me, but he's only off a quarter point. So he reads 43.26 quarter, or I read 43.26 quarter. He's 43.26 half. I wouldn't quibble about a quarter point. All right, so let's try this again. Maybe he set it for there will be, if you're off a quarter point, that's very likely something in the data feed where your data produces a few milliseconds faster or slower than mine. That's all that is. If you're off 1 tick, honestly, don't worry about it. That's nothing. But I'm wondering why we're off 6 points. See, this vertical line is the daybreak line. So this is technically when the new session starts. That's, I think, what he did. All right, let's try that. So if you're trading in a different time zone, find the daybreak line in your chart. That's going to be this vertical white line. And see where your support and resistance lines print relative to that white line. If they start printing, over here somewhere, and you look at it and you say, oh, okay, I'm 3 hours ahead of that line, try putting a -3 into your support and resistance suite and see if that doesn't sync you up. Now, I'm spitballing here. Ben will probably have a better answer for you. I've never had an issue with it, well, obviously. And syncing up with New York time may have been a bad answer because I can see that mine are actually synced with the daybreak. Oh, I hope I didn't confuse anybody, but I'm starting to think that's how it's been set up. I got to get Ben in the room here so he can answer these questions right away. Yeah, Tony's in Central Time, and he says his support line is 43.26 3/4. Again, for a couple of ticks, a tick or two, I would not worry about it. because it's most likely to do with a slight difference in our data feed. Depending where we are in the world, depending where the data is originating from, we're going to gain or lose a few milliseconds relative to each other, depending on your cable connection, depending on how many other people are online in your neighborhood, stuff like that. You're going to gain or lose a couple of milliseconds, and that could offset your chart a tick or two. So if you're printing a couple of ticks difference, don't worry about it. It's close enough. We're not usually looking for the number to hit the line exactly. Remember, these lines are predictive. We are predicting what the support and resistance line or level will be today. Now you can see it's a pretty powerful tool. Sometimes it will hit it right on the mark. In fact, Tony, on your chart, it probably hit it right on the median line and then fell off. But we're looking at really just how the market is responding to these areas. Is it reacting and recovering, or is it reacting and staying below? Now that we're below the primary support and we're working off a secondary support, there's every reason to believe that the market should head lower today. How low will it go? Well, I would probably look around here, 42.98. 42, it technically is 42.97 3/4. Am I going to play that number exactly? No, I'll probably play anywhere from 42.98 to 4300 as a probable support zone. But what these lines do is they give me an indication of where I should be looking, not necessarily the exact number I should be looking at. Yeah, like Tony says, I only wish I was that precise in my trading. All right, so I apologize for not being able to give you a more precise answer about that. Do send an email to Ben, however. He will help you with that. But before you do that, just make a note of a couple of these lines if you're following the NASDAQ. So our median line is 43.40 or something close to it. Our primary line is 43.26 and then our secondary line is 43.13. I can't see it exactly, but again, it's somewhere around that 43.13. And then go to your chart, find your daybreak line, and see where your lines begin printing relative to the start of the trading session. I do know that when Ben was programming it, he needed to give it a start time. He said, when do you want these lines to start printing? And I said, well, have them print at the beginning of the session because that's when you need them. Good morning, Jim. Jim giving us some advanced decline numbers, and as you might suspect, they're fairly neutral. We've got about 1,500 on the buy, 1,150 on the sell. So a slight bullish flavor, but really what we're seeing is just the market kind of chopping back and forth here this morning. We do have another question here from Baz. Baz says that crude's been turning around a lot on the open, and yeah, it has. Now we're working a trend change signal to the upside. Oh, shoot. I didn't get a chance to manage this trade correctly. So we hit our profit objective, no problem. I should have changed my stop strategy so that we at least protected a little bit of profit here, if not just get out flat at break even. But the trend is down, and here we are coming into the hard edge. We'll see whether we produce a hard edge bounce Perhaps a sell signal. All right, a possible first micro-macro cross brewing there. So the buyer's definitely pulling the market a little bit higher, or trying to. Pardon me. The advanced decline getting a little stronger as well. All right, so, well, like I said, this trade got mismanaged. I'm just going to close that out. Now we're looking at this first micro-macro cross signal, and we know it's a high probability signal. The problem with the first micro-macro cross is we're in a little bit of a downtrend here this morning. So technically this is a very aggressive counter trend move, and you can see that we're also in a little bit of a sideways range, aren't we? The market has been overlapping its ranges quite a bit here for the last half hour or so. So this first micro macro cross, we're essentially looking to buy the top end of the trading range. For that reason, I'm going to try to leave my entry a little bit further away. I don't want to be brought in right on the hash mark. I want to make sure we're going to breach the top end of this trading range. Now, as the market retreats and we maybe get a macro pullback or something, and maybe even a red bar buy, well, that would be a little bit more of a predictable signal, because we will have seen a retest of the lows, right? We haven't really seen a retest of the lows, which again makes me concerned about getting involved in this market too early. If we get buy in here on a tick only to have the prices reverse and head lower, that would be bad. They're very neutral right now, though. Market's very, very sideways. All right, I'm going to cancel that order. Here comes our macro pullback. I can be a little bit more aggressive on this one because I would be looking for a retest of the highs. If the buyer's going to take the market here, I can look for it to try to challenge the high. And this is far from a safe trade. Yes, it's a high probability signal. Yes, the DTS system is very often smarter than I am. So even though I don't see the opportunity here, the trading algorithms certainly do. But we're getting some conflicting signals, working on a green bar sell here on the Eagle, working on a trend change here with the Falcon. All right, let's see if we can manage our hawk trade a little bit better this time. I think The problem is the sellers have not left this market. The buyers are not getting the follow through. That's making it really tough to be on the buy side of the equation. So looking for the buyers to come in here somewhere. You can see the difficulty we're having. We bought on this little bit of a bounce, and now prices continue to slip. Crude oil isn't much help. The market's very conflicted as well, very sideways. Okay, so here comes that red bar buy signal I was telling you about that we might see. Yep, see how they're going to come back here? They're not even going to give me a chance. That's the problem with trying to trade against a dominant trend. Very often, if I see the market paying off in one direction, I will stay with that direction for the session. So in other words, if I start the day and I get a juicy first micro macro cross signal, say, and I short it and the signal works out, well, this one was far from being a juicy signal, but here's a first micro macro cross. The market faded. We hit our profit objective. We get a 4-arrow consolidation. We get our profit objective. We get a first micro macro cross. Did that hit our profit objective? It must have got close. Hit our profit objective. So it seems as though they're paying off to the short side. When that happens, I will tend to ignore buy signals. I know I didn't do it here, but I will tend to ignore the buy signals. Likewise, let's say I open up my charts and the market opens and I take this first micro macro cross signal and let's say it fails. Let's say the market brings me in and then starts going the other way and stops me out. That will tell me that because it was a high probability signal that maybe the market is not going to head lower today. Maybe it's going to set up to head higher. All right, so we had a nice move lower. On the NQ there, and we had that green bar sell off of the hard edge here on the Eagle. A nice little hard edge bounce there also on the Raptor. And here again, first micro-macro cross. You can see from the width of these bars, though, that there's certainly some activity down here. Let's see if we can't take advantage of this first micro-macro cross. And because of that activity down here, because this is the place where the buyers were able to put the brakes on the sellers, I would be more comfortable entering below the low than actually on the hash mark. Now, as prices retreat higher, it makes more sense to enter on the hash mark, but I just don't want to be brought in on a little waffle move here. At least that's my intention. A trend change signal here on the Falcon. Notice that it's printing away from the trend line. Why is that significant? Well, when signals print away from the trend line, they're going to have a tendency to try to pull back into the trend line. So here this signal will likely print around 43.04. I'm going to risk it up to the crest in the trend line, or maybe even above the high if I can afford it. Nope, can't. Let's risk it up above there. Because I know if the market does engage my order, there could be a tendency to try to get back into this trend line. That could lead to a little bit of sideways trading. I don't want my stop to be hit. Now we're kind of at the bottom end of this trading range, which is not the best place to sell from. Right? Looking here at the Raptor, you can see our trading range is looking more or less like this. And here we are at the bottom end of the range. And they're going to come here with a sell signal in just a second. You can short it. The trend is down, but you just have to be aware you're in a trading range for the most part. There is a chance of a reversal. So we've kind of got everything leveraged to the short side at the moment. And I would feel better if this wasn't the bottom end of the trading range. I would feel much better about selling. If you're going to sell, you want to sell at the top end of the range, not the bottom. I still think we might see prices slip down here to 43 somewhere. So all our orders are still pending. The Eagle was the only one we didn't place that trade on. Okay, so now we're getting a macro pullback. I will tighten up my order a little bit here, just because the macro pullback, I should have enough room to get to my profit target. Oh, you see, it will be very close. We're going to look to retest the lows here in order to get our profit objective. So a little bit more aggressive on my part. Jim says the bank index just put in a new high. Why is that significant, you ask? Well, some traders believe that the bank index leads the market. So if the banking index is putting in a new high, then it's likely that the stock index will put in a little bit of a rally at least. So here you can see with our Falcon signal that the market in fact did retrace back to the trend line. We have since lost our shorting signal, so I'm going to cancel that. And likewise here on the Raptor. We still have our warning dot, but the signal has evaporated, so we'll get rid of that one as well. Yeah, I think so too, Tony. Tony says Jim must have 27 monitors. He does watch a lot of things, that's for sure. All right, so we just got brought in on the hash mark here on the macro pullback. And the trick to this trade is going to be staying out of harm's way. I should actually move my, should have placed my stop above the crest here in the macro line. If you're ever lost for a place to put your stops, if you have no price structure, take a look at where your macro line and micro lines are cresting. So at the moment, this doesn't look too bad. It kind of resembles a bear flag of sorts. And we have 1, 2, 3. This is going to be a 4-arrow consolidation here. And hopefully we will see the market start to head lower now that we have our macro pullback and 4-arrow consolidation all in the same place. Come on down. Oh, that's the way he does it. Jim, hats off to you. He's got a 50-inch smart TV that he picked up for $349 at Walmart. That is a great monitor. I love it. I never thought of that. That'll solve some of the real estate issues. Okay, so you can see the bears have shown up. We're starting to force the market down. And now I can become a little bit more aggressive with my stop strategy. So at the very least, I'm going to want to bring my stops in above this high. Typically, this is the point where I'll go to something like the bar high low, try to keep my stops a little bit closer in case prices fail here one more time. Pardon me. Oops, need to enable. There we go. It looks like they're going to make a run here and try to take out those lows. We're back here with our sell signal now on the Falcon. So you can see we went into that trend line. I just kind of throw my order in there real quick. I could have also hit the sell market button, as I'll do here on the Raptor, because we've got the comparable signal here also. All right, so it looks like, where are we heading? I said 43, very likely. Yes, our next support line, it looks as though it's printing around 42.98, 4300, somewhere in that region. So that would make for a probable target. just so I have a stop in play there, and we'll look at managing that as the trade goes on. So those 4-arrow consolidations, those are pretty powerful formations also. Oh, the buyer's really coming back here. Bottom end of the trading range. Tough place to sell. Yeah, Andrew says the problem with screens like that is the resolution and the refresh rate. Yes, I suppose it would be. I don't know how that translates into the DTS though. I've never tried it. I should try it on our television just to see what it looks like. Okay, the buyer's making another attempt to rally the market here. Jim says his is a 1080 with 120 hertz. So it seems like it's average, nothing extra special. Oh, the toys that we have. Way to go, Alex. I think Alex has figured out the problem with the support and resistance lines. Alex says, with the support and resistance lines, change the data to 24/5. Oops, instead of 24/7. I bet you're right, Alex. That will make a difference. Because with the 24/7 session, it includes the little bit of trading that goes on Sunday evening before the markets open on Monday. There's a few hours of Globex trading Sunday night. So way to go, Alex. Hats off to you. I think you're 100% correct on that. All right, so here we are. We're fighting the trade, looking for the sellers to show up. Oh, nuts, and here come the buyers. Is that trend line still holding? So far. Uh-oh. They're going to come up here and test the top end of this trading range. I didn't give them a whole lot of wiggle room. All right, it doesn't get much closer than that. I'll be looking for the sellers to come back in here, and here too I'll start to get more aggressive with my trailing stop. Very choppy day today. If we can see the market reverse below the 4,300 area, I think we'll see it tail off. Baz says, I'm out. Crude oil is playing games. Still think it's bearish though. Crude oil is very dicey this morning. You see here on the Hawk, it's changed very little since the open. Very much in a trading range here also. And what concerns me is all the yellow bars. Right, we've got nothing but yellow bars in here. So it seems as though traders are pretty content around this 43.50 mark for April crude. They think that's a pretty fair price. We're getting kind of a lot of mixed signals here this morning. Still flirting with the hard edge, flirting with the trend line. Momentum seems to have decreased. You see how we've had a big move there. You see how the move's getting a little smaller and how it's starting to drift sideways. Sometimes what happens is you get this type of scenario and then the market starts going the other way. The cure for that is for this current leg to get down here below this 43 area, in which case it could resume the downtrend. Put in another leg to the downtrend, and then when you look back in your chart, you're going to say, oh yeah, that was just a consolidation period. We made a lower swing high, and then the trend resumed to the downside. If the trend does not resume to the downside at this point, you can be pretty sure that prices will try to move a little bit higher. This whole limbo period is very difficult to trade though. Because we're not getting the follow through. The trade forecaster says we're currently in scalp mode and we're going to be in, or pardon me, in swing mode and scalp mode in about 20 minutes time. Oh goody. Just what we want. All right, we're still nursing our short position. Well, one thing's for certain, If it fails at this point, this is probably the place to get out. We know there's a lot of volume going through. See how wide that bar is becoming? It doesn't look as wide now because I've enlarged the screen, but there's considerable volume here. If we can just get it to close lower. There we go. All right, we've got a chance. Not saying we're going to pull it off, but we do have a chance. Again, if it fails here, then that's the place to pack it up and pull out. Oh, they're trying. David, I'm glad you're in the room. I got your email. And yes, I will send you the cheat sheets. And David was also asking, Eric, how can I set up that red and blue line on my Eagle? I'm glad that you're in the room because you're going to save me a whole lot of typing. This is actually the ATR line. And to set that up, go here to your indicator window. And when you pull down your assortment, you're going to find one of these that says IW TM ATR trail. It's actually part of your trade manager. It's what the trade manager uses to plot the stop strategies. And you can see there's other ones to choose from if you don't want to use the ATR. There's chandelier, there's the percentage, there's super trend, there's all kinds here. The one I'm using is the ATR trail. So if you double click on that, it's going to show up here in your assortment, in your windows. You don't need to change any of the settings. Just click apply and OK or close. And voila, there it is. Now, this ATR line was brought to my attention by Mike Filigera. And Mike likes to trade the stock market with the DTS system. And what he did is he said, you know, Eric, that ATR line is kind of handy just as a bit of an added filter. So I've been using it, and I believe he's right. I think it's a good addition. It's just one more little filter before we take the trade. It doesn't normally cost us too much in terms of ticks, which is very important. So the way you use it is, let's say we'll look at this signal right here. So this is a high probability signal. It's a red bar buy signal. The hash mark is printing right here, but we're currently against the ATR. So what I would do is I would let the market prove that it can flip over the ATR, which it did on this next bar. And that effectively makes this bar, this current bar, my signal bar. So what I'll do is I'll enter now one tick above the high of that bar. And you can see that most times there will be some pretty good follow through. What it does is it seems to keep you out of a trade that isn't quite ready to move just yet. Let's see if I can find you an example where it actually helped us avoid a bad signal. Well, here. Let's say you were looking at this, and here we've got a red bar buy signal. The market has come out of a strong uptrend. Yes, we've had a test of the extreme, or actually, here, let's go with this one. We've got a hard edge bounce, right? We still have an uptrend. We've made a higher swing low, okay, lower swing high, but it looks like we're trying to make a higher swing low. It's a hard edge bounce. We should anticipate the market to rally off of this. But because it's against the ATR, I wouldn't set up to take the trade necessarily on the hash mark. What I would do is I would let the market break the ATR, hopefully on the next bar. Okay, didn't break it on that one. I'll give it one more. Oh, see, now it's starting to fade. So using the ATR as a little bit of a guide actually kept us on the right side of this trade because prices subsequently fell off. All right, so I hope that answers your question. And yes, I will send you those cheat sheets. And you know what? I'm going to do it right now while I think of it. All right, well, still a very sideways looking market. I wasn't able to ride out the Falcon trade here on that swing, but the Raptor has since recommitted. So now that I know where the limits of the current market are, I could bring my stops in above that, reduce the risk exposure somewhat. By the way, if anybody else needs the cheat sheets, and if you're wondering what the heck is a cheat sheet, that's this thing here. So this is the cheat sheet for the Falcon. It just identifies the higher probability signals. And there's also one for the Hawk. Sorry, I haven't done one for the Eagle or the Raptor yet, but we do go over them every day in the room. All right, well, we're still getting a lot of sideways trading going on here. It's been a difficult day, to be sure. Market not giving us much follow through one way or the other. Oh, there you go. That's a good idea. Tony says, here's a suggestion for the cheat sheets. He says, load them on a thumb drive, go to a copy center, and have them printed on photo paper. That's a great idea. It's more durable that way. And of course, then you can frame it and set it beside your wedding photo. That'll be a nice addition in the living room. Put it up there on the mantle with the picture of your kids. No, they're just not giving it up. All right, well, it looks like we are definitely in a trading range today, and the buyers are going to try to tap the top end of the range. Tony says he puts it under his pillow, hoping that it will transfer to his brain. Yeah, it's a funny sort of day today. Well, I think the things might loosen up a little bit in the afternoon session, which they tend to do at times. Gold is tailing off a little bit. We haven't looked at gold very much. I should be paying more attention to it because it's a good market to follow. It really is. If you're, well, obviously a few of our room members are in Europe. It's pretty much a market that you can trade 24 hours of the day. You see, there's some nice moves. This is on the Eagle, but there's some steady progression. This is a little bit choppy. But today, just a great rally to the upside. Now we're producing a rule of three type signal. So gold trying to head lower, which in turn may see the stock market head a little higher. There tends to be a loose inverse relationship between gold and the stock market. So we don't have the complete rule of three just yet, but it is starting to shape up that way. All right, you guys, I think we're going to shut down the room a few minutes early. There's just not a whole lot going on here at the moment. You can probably anticipate the market to continue to chop sideways. And so look to sell the top end of the range and buy near the bottom end of the range if you happen to generate a signal around there, or just take the rest of the day off. I would check in the afternoon, though. It is likely that we will see something develop today. It may not necessarily be during the morning session, though. All right, you guys, we'll touch base with you again tomorrow morning. And yeah, be careful. Talk to you soon. Bye for now.